Hello guys, welcome back in today's crypto technical analysis. Today, as usual, we do a multiple time frame analysis for BTC. However, before we start, if you guys are learning and enjoying from the content, do not forget to like the video, and if you're new to the channel, subscribe and activate the bell so you do not miss the accurate market updates. Starting from a weekly time frame, we're going to touch briefly on a weekly time frame. As an education, I will keep mentioning that on the weekly time frame, two bullish candles in the recent price action. That was the 8th of August, and then the previous one was 18th of July, the weekly candles. So as you can see, the market got excited, and right from $25,000 200, which was the target level, was $24,800 and $25,000. Right there, we got rejection on the daily time frame. And as you can see, in the last previous 3 weeks candles, got literally covered with these last week's the bearish candle. So there is no need to, as I keep mentioning on this channel, there is no need to get excited below the resistance, these type of bullish engulfing candles. However, you can take an advantage of these bullish engulfing candles based on a lower time frame, and lower time frame, you can see a decent pump in the market based on a lower time frame. So the weekly time frame levels are still the same. The first resistance is going to be 33,000 and then 36.5. Without breaking and claiming 36.5, it's going to be early for us to talk about that the weekly time frame will get back into the consolidation level. Moving on to a daily time frame. Daily time frame price action, 26th of November was an important level for the daily time frame. That was a support, acted as a resistance perfectly to the dollar. We got a rejection. As I said, first leg down on the market, a bit of consolidation in here, and then we saw a massive another dump in the market. So altogether, from the $60,000, if you managed to exit, that was a 70% dump in the market. However, we do not have still the exit signal based on a daily time frame. If you're short, you can keep it open, or if you exited market, it is based on a higher time frame early to open a long setup. Right from $60,000, as you can see, we dumped about 70% dump in the market, and with the current price action, as I said, without getting an exit signal, we're down by 63% plus. In the recent videos that I was keep mentioning, as long as we stay above $23,000, the daily time frame will be on the consolidation. Once we lost $23,900, as you can see with this candle, we saw a decent dump in the market, and we're just below daily support levels, is acting at the moment as a resistance. In the coming days, $22,000, $23,000 are going to be extremely important resistance levels. Without claiming these levels, it's going to be early for us to talk about the daily time frame will get back into the consolidation. However, I'm not giving too much weight on it because lower time frames are heavily under the bear's control, and we'll move on and see 4-hour time frame. Before we move on, further analysis. If you want to learn all this technical analysis, what I'm showing, and if you want to become an independent professional trader, or you're interested in the institutional trading system, you can message me via Telegram at Magnate8, and one-on-one intense masterclass is available, where I'm going to teach you how to become a profitable and professional trader in the market, and it only takes you 5 to 10 hours to master this all. And during the course, you will learn day trading, scalping, swing, and as well as the long-term as an investor trading systems. Moving on with our analysis, as you remember, $20,000 was the long setup. As soon as we claimed $20,000 to the dollar with a hybrid system, then we opened a long at around 21,000 all the way up to $21,500. So average, if you're going to calculate from 21,200-ish level, and I gave the exact target level in advance, we've been following this resistance level, $24,800, $25,000 weeks in advance. So we reached our target level with 18%. However, if you're a swing trader and without losing 23,000, as I said, there is no need to panic, and there is not going to be a trend change. And as you can see with the one candle, once we broke and then the next candle was a waterfall, we saw another dump in the market. So it depends where you exited from 21,000, 21,500 all the way up to $23,000. We saw massive pump in the market. That was 10%. And if you're doing a leverage with a 5 and 10 times, you do the math for yourself. However, we also took a short right around 24,800. That was a level with a stop loss. So we saw another massive dump in the market, 15%, 16% dump in the market with the current price action. If you manage to short from there, 13% dump. However, if you exited right from $23,000, we saw 10% profit. However, with the current price action, over 6% dump in the market. Based on a 4-hour time frame resistance, $22,000 is going to be our first resistance zone without claiming this resistance, which is a bit hard at the moment. And the next resistance is going to be $23,000. As you can see, $23,000 is extremely important. However, I'm not giving too much weight at this stage. We're going to go and test the $23,000. I will be keeping an eye on to this $22,500-ish at this stage. And if you couldn't exit from $23,000 or $24,800, $25,000, that would be your exit signal, because 4-hour time frame heavily controlled by the bears. Moving on to 2-hour time frame. Based on a 2-hour time frame, we've got similar levels, $22,000 all the way up to $23,000 without claiming. As you can see, that was a 0.382, the mirror image, the golden pocket, which is a 0.618. And without claiming this level, it's going to be early for us to talk about the trend change based on the 2-hour as well as the 1-hour time frame. As you can see, how perfectly we got rejection right from the daily resistance to the dollar. 4 times we got rejection and we saw massive dump in the market. And at the same time, these levels, bear in your mind, were given in advance before we came and then tested daily resistance. However, the Fibonacci level that also provided in advance. And if we're going to lose, as you can see, 0.618, 0.67 acting perfectly to the dollar. And as I said, if we're going to hold this level, the local lows, and highly likely we will go in the first place to test all the way up to $22,000, $22,500. If we're going to lose this level, for the swing traders, there is no need to panic. As long as you exited from $23,000, you can keep open your shorts as long as you manage your stop loss. However, if we're going to lose this level, because lower time frames are heavily under the base control, the first stop is going to be $20,000 all the way up to $19,300. So we might see such a scenario if we're going to get a rejection right from $22,000, $22,500, and then the price action will come and test in the first place, as I said, $20,000 all the way up to $19,300. I'm not going to cover 1-hour time frame. 1-hour time frame is heavily under the base control, and we came to an end of this episode. If you guys enjoyed it, do not forget to like and subscribe to the channel. Thanks for watching, and I'll see you in the next one.